Hey traders, Raghee here, and in this recap video I'm going to actually take you into the afternoon of some setups that we just took a look at not but a few hours ago, and I think it's going to be a really good way to understand some of the nuances I look for when I'm looking for a trade. So a few of them are actually, there's three of them I want to highlight. One of them is the Russell, so we're actually on the Russell right now. So let's talk about this one. Now, I'll talk more about this in the premium video, but let me just kind of allude to this now, because the Russell sold off earlier today. And normally when a market moves against the larger trend that I still believe is intact, I won't take the trade. I'll be very hesitant about wanting to take the trade, and I'll focus on being opportunistic about where that sell-off, which is really a correction to me, could land. And that's exactly what today did. It took me to a longer term pullback. Now, I love this setup, especially in the Russell. There's a few things that are working really well for the Russell, and they are really just, I think you look at the still strong US dollar, you look at the trade tariff news that's still out there. You look at the, is it one? I always forget, 1F or 2. I've always heard that misspelling is the hallmark of a great writer, so. And I'm working on another book, so maybe that's a good sign. But I mean, you look at these trade wars, and then historically, traders will flock to small caps in this environment. So when you think about what's happening technically, I like what's happening technically here in terms of what my moving averages are doing, generally speaking. I like what's happening from a price standpoint. The organization of this overall uptrend is still very high. So I like what I have here. And when I say I like the moving averages, there's a few things that I'm keying in on. I like the fact that we're still above the 200, which has a bullish connotation. We're above the wave, which again is very bullish to me. This is what Charles Dow would call a mark-up. And in that kind of mark-up or uptrend, as we more commonly call it, we're looking to take advantage of higher highs. The flow of the river, so to speak, is up. And my wave and grab candles are absolutely predicated upon this understanding of Charles Dow's market trend of application to psychology and price action. I mean, this is psychology and trading analysis and a theory that's, well at this point about a century old. And the reason I developed the grab candles and the wave, or used them in the way that I do, is because I needed to understand what the market trend is first before we put on a trade. And if you really wrap your head around what I just said there, what is the market trend before you put on a trade, you will almost never be in doubt as to what type of strategy to deploy, because you will always start with what the underlying market behavior is, and your indicators and your strategy will work with it, not work against it. So what's working with this market right now? Buying pullbacks. That's exactly what I'm doing. Now, there's another setup I wanted to highlight, and this is in the euro. Now, we trade futures and Forex in the room. Forex right now hasn't been as active because the central banks have been in this kind of flux in terms of the messaging they're conveying to the market. So it's been a little tough, but we just shift to shorter term time frames. And here's a really good example of a short term time frame play that we're setting up, but I want to show you something else here. This is a short, right? The market's been up, but why did I focus on the short? I focused on the short because the overall trend of the market is indeed down. And as this market is rolling over from the up to down, or from a bullish to bearish move, look at what's happening on the 240-minute time frame. Look at what's happening on the 480-minute time frame. These are decent downtrends that have corrected to levels in this 1620 to 116 area. So really good resistance at the 21 EMA, at the 34 EMA, at the wave, and at a major psychological level. But, what if we were going to continue to head up higher? Wouldn't it be great to have a way to understand when to look at a short-term time frame for this kind of rolling over, almost like a U-top, just basically a trend adjustment, right, as we start to look to the downside. So that's another thing we did today. And the last thing we did today was in the Nasdaq. So I had a trade in the NAS that I was very interested in on the 120. And you can see where we are right now. This is an interesting area that we're at right now in the Nasdaq. It's an aggressive level, it's an aggressive approach, but there's a certain exhaustion that's happening here. And the stop is very, very tight. You can actually see what's happening right now. This is a 72.35, 72.30 area that I'm watching. And I'm really not looking to give it a lot of latitude. But if this market, this is one of the levels that if this market's going to bounce, this would be as good a place as any. So these are some of the things that are on my radar right now. And again, why would I look for an oversold support level? Because there's a pretty good chance within the context of, I think, what is chop here, it's better to look for levels that we could catch a bid at as we sell off to that zone. So that's the difference between shorter term and longer term. Now, I know that may take a little while for everyone to wrap their head around, but there's a lot of validity to this. And one of the things I want to dive into in the premium video is what we can do with the short-term time frame, much like what I just showed you in the euro. What can we do with this time frame to maybe better identify when there's going to be momentum to the upside? All right, so I'll see you in the next video.